The Bitcoin price is being manipulated once again. We know it, you know it, I know it. Let's delve into this video to see exactly what the heck is going on in cryptocurrency today. I have a few videos that I'm going to share with you, so make sure to stay tuned. One of them is from Mr. Mark Yusko, an incredible investor who owns a hedge fund and is basically investing into Bitcoin. Guys, you do not want to miss out on one single second of this video because there is going to be jam-packed information. It is a decently long video because the one clip I'm going to show you is all about the cryptocurrency conspiracy, and you guys should be here and watch right to the very end, because the information that comes out of these two clips that I'm going to show you, plus all the content that I'm going to show you, is going to blow your mind right out the water, and you're going to see exactly why we're being fooled with all of this FUD and the noise and all of the rubbish around the Bitcoin spot ETF. BlackRock knows it. The SEC know that. All of these companies that have already applied, they all know already that Bitcoin spot ETF will be approved very, very soon. There's no doubt about it. It is not a matter of if, it's just a matter of when. So guys, make sure you guys are subscribed to the channel. Let's get this channel past 1,000 subscribers already, guys. Come on, let's do it, man. Not even wasting time. All right, guys, I'm going to show you a few charts. Well, first of all, I'm going to show you this video clip from Mark Yusko before I carry on with anything else in the video. I've done enough Bitcoin videos for you over the past few days to see where Bitcoin price is. We're pretty much going to chill for now. Let's go and have a look at this clip right here. Stay tuned.
Is being manipulated the price of Bitcoin is being manipulated right this moment, every single freaking day, because you can sell a paper Bitcoin with no corresponding demand for physical in the futures market. And the longer they put off the ETF, the worse this gets. And it's intentional. That's the thing. It's not like this is magic. This is real, and it's been happening in financial markets. Look at every commodity market in the history of mankind. When there is no futures market, the commodity has a nice cycle between buyers and sellers and producers and speculators. When the future is introduced, you get peaks and troughs, and you get massive financial engineering, and you get manipulation, because it's very profitable to manipulate prices using paper. Right? In the old days, if I wanted to sell you oil, Jack, I had to have a barrel of oil. Mm-hmm. Now I can just make a promise that I'll go get a barrel from Jim here, and maybe he'll have some to give me. But hey, if I can't get it, we just settle up. Except in 2020, when they couldn't all settle up because the Saudis had come in and filled up all the storage and bought up all the storage. They didn't actually fill it up. Mm-hmm. They just bought it up, and the price went negative. Right? Remember, oil price went negative? That was fucked up, right? That was unreal.
Yeah.
Now, Bitcoin goes up and down in the US partly because of this, right? So in the first 246 years of our republic, we printed $10 trillion. 246 years, $10 trillion. Then in 18 months, we printed $10 trillion. Come on, someone shudder a little bit when I use the T word. Y'all know what a trillion is, right? Y'all math majors. I'm going to shut the doors, make you sit here with us for 31,710 years, which I promise would be most unpleasant to listen to me for that long. And you got to spend $1 every second. That's 1 trillion. So 10 trillion. We printed 10 trillion. So if you doubled the money supply, what should have happened to the dollar? Should have gone down in half. Exactly. What should have happened to the price of Bitcoin? Should have doubled. That's exactly what happened. Well, but it didn't just double. Yes, it did. It was about 13,000 before. It's about 26,000 now. It perfectly doubled. But it's down in the last few months. No shit, Sherlock. Have you seen this thing called Bitcoin futures? You can go to the day the Bitcoin futures ETF was approved. The day was the peak of Bitcoin priced in US dollars. Why? Because just like gold. Anyone looked at gold since the pandemic? Gold should have doubled. Read Chris Wood, okay? Gold has been the perfect store of value for 5,000 years. It's a long time, but it's been flat, dead flat at $1,900. Why? because it gets spoofed by artificially manipulated by JP Morgan, and they get fined every year $1 billion. You keep finding us $1 billion and we'll make 20 and we'll be happy. And they'll keep the price flat. So they've artificially suppressed the price of Bitcoin over the past few months. Why? Well, because BlackRock wants to buy it really cheap. There was a great meme the other day. Please don't sell your Bitcoin to BlackRock. Please don't be that person. But that's what's happening. And everyone's like, oh, when's the ETF going to get approved? What's that going to do? It's going to get approved when JP Morgan and BlackRock decide it will be approved, just like GLD was held up for 2.5 years until JP Morgan could get short enough gold. Crypto, digital assets, whatever you want to call it, actually are uncorrelated with traditional assets for macro reasons. Stocks and bonds are highly correlated along with currencies and commodities because they derive their value from the same things: GDP growth, inflation, interest rates, and corporate profits. Those 4 things have nothing to do with Bitcoin, Ethereum, Solana, anything. Nothing. Those things are driven by millennial adoption, okay, the tech itself, the regulatory environment, and changes in monetary supply. So there's a little bit of linkage there. But this idea that somehow stocks and bonds are the same, most of the garbage that passes as crypto has no equity value, no debt value, no claim on cash flows. It's literally dog shit coins that people trade back and forth. That is not a thing that has value in any way, shape, or form. So macro doesn't matter to all that stuff, but it matters. So that value today is in the low 50,000s, not 26. If that's accurate, then the current price is below fair value. Well, what does that mean? That's what happens at the end of bear markets as you begin the accumulation phase. And this is why you have a 4-year cycle. So all the punters and speculators and gamblers and degenerates who bought on leverage, which why would you buy an 80 vol asset at 100 times leverage? You're an idiot. And it goes down and everybody gets liquidated. And so you fall far below fair value and then you eventually trough. And just like at 3,200 in December of 18 was the very, very bottom. Fair value at the time was around 11,000. You'll eventually accrete back up through crypto spring and summer. We're in crypto summer today from June until June of next year. And you accrete back to fair value. But then the halving comes along. Well, the halving does something interesting in that it doubles the fair value, in that it's a built-in mechanism for moving the price. And by moving the price, you attract interest. Because if things are moving, people are interested in them. So that is true. And so once the price starts moving, after the halving starts and the block rewards go down, then the investors get crowded out by speculators. Investors buy assets below their fair value. That's anyone who's buying Bitcoin today. They are investors. When it gets to fair value, then the speculators come in. What are speculators? They're the opposite of hedgers. Hedgers are forced to sell. They produce the asset. They sell in the marketplace, usually in the futures market. And the speculator is just the opposite side of it. There's nothing wrong with a speculator. The problem is the gamblers. The gamblers come in after when it's really moving, and they start buying with leverage. And that pushes us into crypto fall, into the parabolic where we get above fair value. So the last fair value was around 30,000. We got all the way to 69. And then the crash happens.
And so the difference between a speculator and a gambler is just leverage?
Leverage and knowledge. A speculator is taking the opposite side of a hedger because they know the hedger must sell. Okay? A gambler doesn't give a shit about any reason. They just know that something's moving.
So as you can see, it is completely epic what is going on. BlackRock, Van Eck, Fidelity, all of them want your Bitcoin. And if you're going to wait to buy Bitcoin when they're buying it at this 26, 27,000 price today, and you're going to wait until it's up at 50, 60, 100, 300, 3 million, whatever it ends up being to buy Bitcoin, guys, you're going to be on the losing end. You're paying them to sell you an asset so that they can take your money and make your money. Does that make sense? Let me know down in the comments below. But I want to go and show you the actual Bitcoin chart, because this Bitcoin chart, guys, oh man, this is exactly where they launched the Bitcoin ETF, futures ETF, that is it, on the 19th of October 2021. Well, look what happened. If I have to go down and look at this in the daily, I'm sure it will be very, very accurate. But I'd like to just show you. Look at what happened. They literally launched the ETF. We had a crazy rally over here. This was all the hype, obviously, leading up to the futures ETF that was being launched. And then boom, guess what? They sold the shit out of it. They sold it. Why? Because just like Mark Yusko was just saying in that video clip, they launched the ETF. So it's paperback. I don't know you anything. You don't know me anything. We'll settle wherever we possibly can on the price action. That is exactly what happened with gold, exactly the same time. If I zoom in here, this happened on, I think, the 18th of November 2004. The gold spot ETF launched. Now, this is spot. Spot is different to futures, guys. When the futures ETF was launched for Bitcoin, look how it dropped. Yes, it dropped. This is how it dropped. And then we had FTX and, Luna, and then FTX and all this other nonsense that came. And guess what? Look at this double bottom. Look at this double bottom here, guys. You surely can't tell me that Bitcoin is going to be coming down much further any longer, guys. I just need you guys to know right now, and I just want to show you something very, 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 very beautiful while I have you on this video, because right now, if I have to draw a triangular pattern for you guys will be able to see exactly what is going on. So maybe there's a small little retracement down here to 23,000, and then we pop back up. But guys, once we break this pattern, just like we broke it here, just like we broke it there, it is inevitable that the Bitcoin price will continue on a long trade. Now, I'm going to show you a chart that is incredible, and this is from Charts BTC. So you can see here how Bitcoin doubling days per range. So literally from it when it's started, it's in inception in 2009. It basically rallied this entire time. Look at where the market lows are. But it doesn't matter. In the last video, you guys are going to see, even if you bought at the high and there was this crash, you're still higher than the last low. You're still higher than the last high. The same thing here. Look at this high. Even though it crashed, you're still higher than there. Even though it crashed, you're still higher. You're pretty much higher than that at the moment. Come on, guys. You surely need to be able to see that Bitcoin over the long term is 100% going to be going long for sure. Let me know what you guys think down in the comments below. I would love to know what your time frame is for Bitcoin in terms of the end of the next bull cycle, and what do you think the price will be at the end of the next bull cycle. Let me know down in the comments below, guys. I can't wait to read your comments. So this is when the gold spot ETF was launched, and as you can see, we had literally a 9% pullback. A 9% over a, let's just consider this little drop here. It's a 52% drop, okay, that was created from the futures ETF. But you can't do that with spot. You can't manipulate spot. You can manipulate the futures. You can create volatility up and down, but you can't do that with the gold or spot ETFs. Okay, so guess what? It rallied more than 580% up to this high, and that was from 2004 all the way up to the end of 2011. So that was 7 years that it took to do, 8 years that it took to do that, guys. Wow. All right. So with that being said, you can see here that this is the price history of Bitcoin. So started off in 2009 at $0, where miners bought machines and equipment. I still remember some of my mates that I used to jaw with. Shout out to them, Mark and Thomas, that used to show me, get into Bitcoin, get into Bitcoin. Guys, if I had listened to them back then and what this was all about, and I actually took the time to listen to it and read it, my goodness me, where I would be in crypto today. I would be exceptional. But I'm not there, so it's okay. like I posted yesterday, and I made this quote. So if anybody's out there on the internet stealing my quote, good for you. Good for you guys. At the end of the day, but I made a quote for you guys yesterday here. If you go and have a look at my community, you will see here. I said the best time. Where is it? Here. The best time to buy Bitcoin was in 2013. The next best time to buy Bitcoin is today. Do not miss out on that opportunity, guys. I'm telling you, you don't want to be caught hanging with your pants down without any Bitcoin. Get yourself at least 0.01 Bitcoin at the very least, guys. That's $3,000, call it $2,800 worth. I'm pretty confident most people could afford that today, okay? Even if you did it over a 6-month period, it's okay. We still have a little bit of time down at these prices. So, whew, wow, as you can see, you know, once again, the Bitcoin price chart, BTC's creation, BTC hits $100, BTC gains wider acceptance, trading ban rumors and more, all-time highs, and uncertain economy. Oh no, shit happens. Oh no, Bitcoin is not going to be around any longer. Mistaken, guys. And that's exactly why I want to show you this chart, and then I'm going to leave you to the last clip on this video that I want to share with you. So I've shown you this chart that I've done for you guys a little while ago, but basically the red equals months, down months, and then the green equals up months. So if I zoom into this, in and out of this chart, you'll be able to see that. I have drawn the triangular patterns where we actually broke to, sat down on, and broke up, and we are currently doing the exact same thing right here, right now. So I actually just want to draw that from there for there, yeah, so that you guys can see this, okay, that even though we can, as I say, pull down just a little bit, that's okay. You won't find yourself buying Bitcoin at this price for much longer. So once it breaks out of this pattern, every single time, guys, 746%, 626%. This one was 1,500%. This one was 30,000%. Guys, do not miss out on this. The average bullish months are 19 months, and the average bearish months are 12.5 months. Now, this was what I had said, but I said the end of the next bull cycle will probably be anything between February 25 and May 25. However, there are other YouTubers out there that are really good traders that are caught, and one of them is Scalping Pro, so shout out to Scalping Pro, that actually drew a chart that said, well, perhaps we could hit the all-time high peak on the 1st of September 2025. So not that far off, right? Guys, I'm going to leave you with this next clip. Make sure you watch the entire thing right to the end and let me know what you think about this. Much love. Make sure if you're watching this channel and have not yet subscribed to my channel, to subscribe right now. Go ahead and clap that subscription bell, guys, and make sure that if you are watching this channel and this video, that you're smashing the thumbs up for me so that you guys are helping crypto adoption on the internet. Come on, just do so. Anyways, guys, last little thing, I have a link down below. If you want to trade Bitcoin with me, I'm making good money. I hope you guys will be making good money alongside with me. Make sure to stay tuned, hit that notification bell so that you know when I do other videos just like this. And much love. We'll see you on the next one. I'm going to leave you right now with this video right here.
The question that I had for you the other day was, why are you calling this the Great Crypto Conspiracy?
Okay.
And when you explained it to me,
Yeah.
it's really, people should go to jail, but it's not illegal.
No.
And this is really horrible. And it's why we all feel so freaked out. But they are feasting on our savings. And it's an enormous robbery, quite honestly.
It's a huge transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid 90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, oh, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, oh, this is just a market for idiots. Nobody should be buying this stuff. So they literally stole all this wealth that should have been in the hands of individuals that owned Dell, Microsoft, and AOL. And then from 1995 to 2000, of course, we saw $5 trillion come into the market, and the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new. So
hang on just a second before you go on.
Yeah.
This one is really important to me because the housing crisis, those banks, they bought up all of those houses. They were the ones who caused the problem.
Right.
Then they were talking everything down and said, I'm just taking the junk off the table.
Yeah.
That's not junk now.
It's not junk. When it's dropped 40 to 60%, it's not junk. So this happened between 2011, 2012. Blackstone Group buys 50,000 homes. But during this period of time, the regular individual couldn't get a mortgage, right? It was virtually impossible to get a mortgage during this time, exactly when institutions were buying. And then the dot-com crash in 2003. If you can go back and look at old CNBC clips during 2003, even as the market was starting to come up, oh, don't buy tech stocks. No, they're evil. Don't buy tech stocks. Don't buy tech stocks. But institutions, if you looked at the 10Ks, the Qs, and all of the filings, the quarterly filings, they were all loading up on tech.
This is how the rich get richer.
Yes.
They know, they're connected. A lot of times they're coordinating without the insider trading. This is not illegal to do.
No, manipulating the news cycle, if you're smart about it, is they can get away with it. Nobody's ever been arrested for anything like this.
So now, with crypto, I know personally, people that would have gotten in or stayed in if these people weren't saying what they're saying.
Right, and so this has really been extremely egregious. So on September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says he'll fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
Right.
Okay, George Soros.
George Soros, in January 24th, price was already down, calls Bitcoin a bubble, says Bitcoin is the worst, the worst investment in the world. Don't buy Bitcoin. Don't buy Bitcoin. Basically throws gasoline on the fire at this point. And then what do we find out? So he says bubble here.
It drops 44%.
Right. And then here in April, 2 months later, guess what we find out? His $26 billion family office has approval to buy cryptocurrency.
Right. And we only knew about it publicly here. And this is the kind of thing that George Soros is famous for this, talking the sterling down.
Yeah.
And what did he do? He stole the pensions of all the little people.
Yeah, made $1 billion.
Yeah. Okay.
So then here now, Goldman Sachs, this, again, February 7th, most cryptocurrencies will crash to zero. Now, I remember when they said this in February, and I had, through my network, I knew that Goldman Sachs was setting up a crypto trading desk. Absolutely knew they were setting up a crypto trading desk.
And I remember you telling me that.
Right. And then, of course, they were denying it. No, we're not. No, we're not. No, we're not. Price falls down 27%. And then what do we find out? We find out here, they say BTC 0, and then we find out just before May, new trading desk. Not only that, they put $400 million to buy a cryptocurrency trading platform. Okay, so February 7th, it's all going to 0. May, we just spent $400 million just on a flyer.
And they're not the only ones.
No. So you have a lot of institutions that are coming. You had Christine Lagarde from the IMF come out. And this was, what's funny about this, Glenn, is it was all around the same time. It was almost like I can't prove collusion, but, it walks like a duck, it quacks like a duck. And you know what? It's probably a duck.
The people, they all hang out together. They all think alike. It doesn't have to be calling each other.
Yeah.
They know this game.
Yes. So IMF, Christine Lagarde says in the first part of the year, says all central banks should band together against cryptocurrency. Right. Have you ever heard her say all banks should band together against illegal arms?
No.
Or illegal drugs?
No.
Or human trafficking?
No.
No. But this nascent asset class, we must all join arms against.
What this did was play into people's heads that these guys are never going to let Bitcoin survive.
Right.
And so people thought, this is over.
Yeah.
So let me show you, can we show a chart of the 5 crashes? This is from, I think,
last year, right?
Last year, okay? Do we have that chart of the 5 crashes of Bitcoin?
Right. It was 30%. I think 4 of them were 30%, and 1 was 40%.
And this is, here it is. Explain this chart. Those are Amazon crashes.
So these are Amazon.
Do you have Bitcoin?
Yeah, we need the Bitcoin chart.
We are.
All right, they'll come up later. Okay. Yeah. So what I want to talk about now is one of the key lessons I learned from being involved in the market so long is rather than listening to what people are saying, look at what they are doing.
Correct.
So this is what we should look at, and this is what I want people to focus on now. Billionaire hedge fund manager Stephen Cohen, who's worth between $12 to $14 billion, by far the smartest hedge fund manager in the world, I would say of the last century, is buying Bitcoin. $6,800, buying Bitcoin. Mark Lazary, Avenue Capital Group, worth about $1.7 billion, has put 1% of his net worth into Bitcoin at around this price, $7,500. Andreessen Horowitz,
Mark Andreessen.
That's right, Mark Andreessen, an early investor in Airbnb, Skype, Facebook, just launched and Coinbase just launched a $300 million fund. Wellington Capital, they have $1 trillion in assets, are starting to get involved in Bitcoin futures. Susquehanna, the 12th largest trading firm by volume, they now have their own Bitcoin custody department, their own trading department, and they're trading Bitcoin and Ethereum. Goldman Sachs, this new CEO, David Solomon, the most pro-Bitcoin / cryptocurrency guy on Wall Street. The most pro
Goldman Sachs.
Goldman Sachs. He's the new CEO. He's coming into power shortly. BlackRock, this announcement just came out, the world's biggest asset manager. Now, last year, Larry Fink says, oh, you know what cryptocurrency and Bitcoin's good for? Money laundering and drug dealers. Right? So again, if you look at what he's saying, you're going to sell your Bitcoin, right? You're going to say, oh, this is all BS. But guess what is happening now? They're going to launch an ETF. They're looking at an exchange-traded fund that will allow anybody with a brokerage firm to make it as easy as hitting a buy button to go out and buy Bitcoin. So you've got to look at this preponderance of evidence, right? All these people are already wealthy. All these people care about their reputation. If Bitcoin is such a trashy asset, why are all these people getting involved?
This is it's really interesting because this is kind of like, in a much more positive way on this side than what these people are doing. It's kind of like with Donald Trump. You don't listen to what he says because he'll say some stuff that's like, what? Watch what he does.
Right.
Because what he's doing is making sense. If you're a conservative, it's making sense.
Right.
And it's moving orderly. But what he says sometimes is almost misdirection.
Yes.
That's what they're doing.
Misdirection.
Okay. Let's talk about Nextel and Apple.
Okay, yeah. So I want to talk about What has separated me in this marketplace, I think, what has allowed me to show my readers such massive gains, and the reason why I don't just sell right away, is because some of the experiences that I went through in the past. So between 1990 and 1991, I was a kid, and I had loaded up on tech stocks. I had a lot of Microsoft, a lot of Oracle, stuff like that, and I had a bunch of it personally, and then the whole market crashed, and my Oracle went down 85%, right? On a split adjusted basis, it went down to 12.5 cents a share. And I got scared out of a lot of it. And I sold a bunch of my Oracle, and I sold a bunch of my Microsoft. And because it was a crash, just like we're in right now.
Right.
I went back and I looked at the math, and by the end of the decade,
don't do that.
if I had held those positions, I would have been $20 million richer just on two stocks. Right? That was the magnitude of that move. And you would think I would have learned my lesson. In 2003, we had another crash. I sold my Nextel, which was a great company.
Yeah.
Sold it at $2. Less than a year later, it gets bought out at 14. 2003, I'm super early on Apple Computer. I'm in at like a split adjusted basis of around $1.
Oh my God.
And owned it for a couple of years. I thought I was making a killing on this idea, sell it, and if I had held on to it, my clients, because of the amount that we owned, collectively, my clients would have made $49 million.
Oh my gosh.
Right. So these lessons are very real, Glenn.
Right.
And so I have been through this cycle over 3 separate decades, and I've got a do-over now, right? 23 years later from 1990, I've got a do-over. And so my mission here is not only just to grow my wealth, but to help America grow their wealth too. I mean, the average American investor got blown up in 03, got blown up in 08, and their savings have just been absolutely demolished.
This is a chance for people
to rebuild.
To rebuild and rebuild in a dramatic, possibly generational sort of way.
Without risking
a lot of money.
A lot of money.
Okay, so encapsulate this. What you're saying is they've played their card.
Right.
They've driven the market down.
Yes.
These kinds of early techs, we'll show you here in a minute, it's very volatile. But then at the bottom, they say, don't go in, it's going to crash, it's going to be worse. They all start buying.
Yeah.
You're saying now is the time to get in.
Now is the time to buy.
Because they're coming.
Yes.
And
now,
once they come,
you will see this market absolutely explode to the upside.
So now let's go back to the 5 corrections. This is 1 year.
That's just last year. Yes. That's
Explain this.
So I had recommended Bitcoin back here, and in 2017 we just saw this massive volatility. And you got to remember, if you don't see that, you see this big move down, and you're freaking out. So every time this happens, most people.
I mean, a 40% crash is scary.
That's what happened in July.
Right.
But I would say what separates me is that when we see these big moves down, I get in front of the camera and I shoot a video.
Yeah.
And I explain to my readers.
You don't hide.
What's going on. I don't hide under the counter, right? I let people know what's going on.
And here's the really important part here. If you buy at the low,
right,
at the next crash, you're still higher.
Yes.
You buy here at the low, the next crash is here.
Yes.
You buy here. So if you're buying at the crash, even if you buy at the high, you're still higher than the last crash.
Right. So this is one of the reasons why I say that Bitcoin is not a bubble, because if you look since 2011, we've had 4 major moves from lows to high, from lows to high. And even if you bought at the high of each move, you have still made money.
Right.
And that can't happen in a bubble.
No.
That can't happen in a fraudulent asset class.
Okay, so the stock market is different. It crashed like this, 39% or 30%. But that was 10 years ago. We don't have those wild swings.
Right.
But early tech does. And we go back to Amazon and show the difference here early on with the crashes.
Right. So here, this could be a cryptocurrency chart, right? I mean, this is from 94 to 54. Oh my good Lord, right? I mean, that makes you want to throw up when you see that.
Right.
Right? You know, from 246 to 173, 402 to 297. This is just horrible volatility.
And no one, if I owned it at 402, knowing me, and
Right.
it goes to 297, and I don't see it going back up,
Yeah.
I just see this, I begin to panic.
Of course.
And I
It's
think, all right,
natural.
we should sell some of it.
Right.
No one in their right mind today would say sell Amazon.
Right, correct.
Right?
Yes.
They would say, oh my gosh, you've got Amazon stock, when'd you get in?
And so this is the special sauce of what we do, right? How emotionally the average person can't handle that. And so I recognize that, which is why I recommend small positions.
Okay.
Because if you're not risking life-changing
Right.
money, then you have the ability to handle that kind of volatility.
Which is when when it was at $300, I didn't take my own advice, but I said to my audience, look, buy it, but a fancy dinner and a weekend.
Right.
Okay? You're going to blow that money.
Yeah.
Just take that amount and put it into the market.
Yeah.
Most people think you can't do that now.